One too many YouTube analysts only follow up on their winning trades. This gives a skewed outlook on what trading is really about and perverts trading reality to their viewers. As this channel is meant to be sincere, I will, starting today, follow up on my swing trades, for better or for worse. Few technical analysts seem to follow up on their trades on YouTube. This means that whatever they have said before is quickly forgotten and hidden amongst all the new technical trees they throw into their analysis forest. And once you begin to pay attention to this phenomena, you will see it all over. Many technical analysts conduct one elaborate analysis after the other, but later only remind you of the ones that worked out, whereas the bad ones and the far off the mark conclusions are never mentioned again. This creates the idea that the trader possesses some sort of supernatural qualities to see into the future, whereas it in truth comes down to either fragile egos or simply the fact that they haven't understood the very object of trading to begin with. For as mentioned in detail in the previous episode, how to watch a YouTube technical analysis, which by the way is a mandatory watch from now on, mandatory watch, go to your room, do your homework and eat your vegetables. What I meant is it might be beneficial for you to watch it as it will give you insights and perspective on how to get maximum value from watching a technical analysis video on YouTube. So, as mentioned in detail in the previous episode, the prestige in trading lies not in being right, but in making money. And as many other professional traders, I am wrong a lot. What I'm good at, on the other hand, is at exiting a position once it goes against me. For I don't care about small losses as long as I get the big winners and the occasional jackpots. So, as one of the purposes of this channel is to give a truthful depiction of the markets and general trading, as well as my personal trading journey, I will from now on follow up regularly on the swing trades that I take, trade prospects that I bring up in my technical analysis episodes. You will then be able to backtrack and reverse engineer any trade in full. We will now briefly discuss what has happened to each current swing trade I hold, their current technical status and what the continued plan for them are. We will also look into some prospect trades that I keep a close eye on. Now, the equities we'll follow up on are the OMXS30 index, Swedbank, Quickbit and Starvolt. And the prospects we will look closer at are Fingerprint Cards and Tesla. Let's begin with the Swedish index, the OMXS30, as its overall strength directly or indirectly affects the other swing positions. Again, do note that each evaluation part from the OMXS30 will be fairly short. And do note that nothing in this episode is financial advice. Everything I say is my own opinions and conclusions only. And if this episode and this channel help you to better understand trading and the markets, please like and subscribe. Or share it if there are others who may benefit from this content. Here we go, the OMXS30. Now, in the record week market and grand shorting opportunity ahead, I talked about shorting once the price retested the EMA 200 on the daily for the 6th time. And in all of the previous technical analyses, I have talked at length about the cluster resistances at 1600 and 1660 respectively. The index has tested the area above those cluster resistances but gotten rejected. But to be fair, I did not expect us to rally as intensely as we have in the last few months. Once the price had been rejected at the 0.5 fib cluster resistance, I took a short position at 1590 with a 2.x leverage. I reached my first sell target of 1495 and immediately lowered my stop loss to break even to secure profits. My second target wasn't until 1394. However, when I reassessed the situation, I noticed that the price reached a diagonal and horizontal support level on the hourly, upon which I sold off an extra 15%, just in case. In hindsight, this was the turning point after which the index rallied by another 17%. I closed the remainder of my position at break-even after having already secured a decent profit. As the OMXS30 sailed through the cluster of resistances, the index finally began to show some weakness on the hourly chart. This happened on June 10th as the RSI gradually weakened from strong levels to a close on the downside of the upper bearish blue, always on the downside, upon which the price rolled over. I was thinking of taking a short position, but instead decided to take an even bigger short in Swedbank as their technical maps showed much more weakness. In other words, the technical upside of Swedbank seemed more limited than that of the OMXS30, and their downside greater. And the fact that the OMXS30 index showed signs of reversal further strengthened the case for that type of short. But more on that in a bit. The conflicting part with the OMXS30 as I see it is that the RSI now is hovering between the lower bullish red and the upper bearish blue. This is a sign of indecisiveness, as consistent failure for the RSI to break below the lower bullish red line is bullish, and as its frequent rejections to break above the upper bearish blue line is bearish. For whenever the RSI is stuck in limbo between those two lines is typically a sign that the market yet hasn't made up its mind of where to go. A retracement or correction is however predominantly in play. If such correction fails to break the lower bullish red, however, it could mean a new strong move to the upside is to be expected. As it stands, such retest of the lower bullish red would likely coincide with roughly the 1560 to 1570 support levels. If the lower bullish red line holds, I do expect another strong move to the upside. Upon a potential clear touch on the upper bearish blue line, I am looking at laddering in shorts at a big leverage and where the stop loss in such case will be set at any RSI closing above the upper bearish blue. Compared to traditional trading, this opens up the possibility for some truly attractive risk-to-reward trades that allow you to utilize hefty leverage. Despite the inherent macro weakness, both technically and fundamentally, there is paradoxically an emerging possibility of a parabolic run to come, one in which case emotions were to dominate the arena and one in which technicals and fundamentals would both become temporarily irrelevant. Should such parabolic move proceed to happen, it would be the final breath of a dying beast. But don't worry, we'll discuss a possible parabolic move at length in a soon-to-come episode. Moving on. Swedbank. In Banks, the King Must Die episode, we talked about the overall weakness in the banking sector, where Swedbank in particular shows levels of exhaustion and dejection. As in the reversal of the OMXS30, I waited until the hourly began to show some weakness before entering my short, which also coincided with the EMA 200 on the daily. In this case, I entered here, as the RSI made a clear touch on the upper bearish blue. For those who haven't watched the RSI trilogy, I strongly recommend you to do so. Those episodes will open up your eyes to a whole new depth within trading. If not, suit yourself. But don't forget that vegetables and homework are good for you. As I was busy producing episodes for this channel, I didn't manage to enter at the ideal price of 132.80, but rather at 130 sharp. It may not sound much, but this tiny difference greatly affected my risk to reward. It was still good enough, although I could have quadrupled my leverage if only I had entered it at the right time. The stop loss was set at 137, with some leave room right above the local high of 134.60. Swedbank then immediately went down and hit the first profit target at 120. My stop loss is now lower to break even and the trade itself is a guaranteed winner. Technically speaking, the trade is now free rolling, and as it stands, Swedbank still looks inherently weak, and I will stick with the remainder of the trade and hope it will hit my other targets. Quickbit. This golden nugget, in which I was all in for some time, now constitutes only 10% of my portfolio. This is how I played it. I sold off most of my position in early March as the price retested the lower side of the red box at around 1080. It did temporarily find its way above it in April-May, but the price was quickly rejected, and what we've seen since the initial peak in August last year are lower highs and continuously huge sell-off candles. For as you can see, almost all of its dominant volume candles are red, red, red. As these things combined are bearish and there are no current signs of reversal, I decided to step out of Quickbit for now in order to put my funds at work in some more auspicious short-term prospect. Now, don't get me wrong, for despite its temporary technical weakness, the company is grossly undervalued and its long-term upside potential is immense. Quickbit's stock behavior does in many ways resemble that of Fingerprint Cards prior to its 2015 explosion. This could very well be an extended power amassing move, for as it seems we are trading within a major descending triangle. I will stand by the sidelines for now, but once the price passes the resistance cluster of EMAs and finds its way back into the box again, I will begin to look for a re-entry again, but only if accompanied by heavy or steadily increasing buying volumes, as a trend reversal will otherwise not be likely to sustain. Starvolt. I did manage to call the previous local top at 0.28. But before getting carried away, there was a lot of luck involved in that, so do not take such predictions at face value. Equities such as Starvolt are volatile bastards where a single person can affect the daily price, hence my own target prediction was rather a fluke. The important thing is that the price was rejected at the previous strong resistance. This area on its own is what matters, not the exact price. My only regret is that my sell order didn't go through. Experience should have taught me already to put the sell order slightly below the technical target. In this case, it should have been set at around 27 or 27.50, as it was a fairly big position. In such case, I would have been able to buy back shortly thereafter at a massive 50% discount. What I did do, however, was to add on another 40% to my position the very day after, when the price was trading at around 18.50. My current average price is 0.125. Now, Starvolt looks incredibly strong, and that explosive move to the north that I keep talking about is very much in play. One thing that speaks in favor for this is the fact that the RSI on the weekly has been trading within the bullish red channel all the way back since 2013. In such case, the steady decline and retest of the bottom were likely just a big power amassing move. Primarily looking at the RSI channel, Starvolt shows immense strength, particularly in the last 2 years, as the RSI has consistently failed to break below the lower bullish red line, which says there is likely more upside in store. We have also begun to see a change of trends on the daily with higher highs and higher lows. And on the weekly, we could be well on track in creating a possible cup formation, which in case also given a handle would be a long-term bullish sign with technical targets at around 1 krona, or more than 400% above the current levels. For these reasons, I am looking to add on further to my Starvolt position, possibly even doubling down, but only if given a good technical entry spot, of course. My initial target is at 0.50, upon which the price will likely struggle technically to close above on the weekly. This area on its own constitutes a strong historical resistance level. If it manages to push through that level, though, it could go as high as 0.80 to 1 krona. However, I will regardless release a good portion between 0.45 to 0.50. Long-term, Starvolt is a different story, one in which I remain very skeptical. Any spastic move to the upside will be regarded as a temporary one, which will most likely be followed by an equally steep decline. For that reason, I will not make myself any illusions that any aggressive move to the upside is a sustainable one. Buying and holding Starvolt in the long run is a risky undertaking, and they certainly have to prove themselves first. When the company was launched in 2007, it had about 20 million stocks. Today it has 10 times as many, roughly 200 million. And this watering out is due to poor sales and frequent rights issues, as in constantly begging the shareholders for more money to keep the company's nostrils above the surface of the water. Moving on to the prospects. Fingerprint Cards is one of my most lucrative investments. The not so fun part of the story, however, is that I missed out on most of the ride. An investment that at most would have generated me $3 million. A painful yet important lesson. For the full story behind this, please watch the episode Fearing Greed Made Me Miss Out on $3 million. Now, Fingerprint is a solid company with every fundamental chance to strike big again. After having peaked at 136 kronor in 2015, it is now trading at an unjustified 87% discount. Technically, the price has hovered sideways for 2 years within a fairly generous trading range. However, at some point it will leave it. I personally think we might be in for something similar to the pre-explosion move of 2015, where the price hovered sideways in a 2-year-long descending triangle. It had a false downwards outbreak to shake out the last skeptics, upon which it took off 2,300% in about 10 months. The RSI made a steady decline on the weekly, much similar to the current events. I believe we have reason to think that Fingerprint Cards might be in for a similar ride, albeit an initial move to the downside might very well be in play before taking off. And once it does, initial long-term targets as high as 77 to 85 kroner could technically very well be in play. New all-time highs within the upcoming 3 to 4 years would however be naive to wish for, as the price resorted back to its initial base prior to the 2015 explosion. The prospect of new all-time highs would have been an altogether different story if only the price had stopped and found a new bottom at least the 786 fib. For per classical technical analysis, whenever this level breaks, all-time highs recoveries are difficult and rare, at least within a foreseeable future. By reaching a new local top at 77 to 85 and then establishing a solid base at around 40 to 55 kroner could pave the way for new future all-time highs. But that's too far into the future given the technical map currently at hand, so let's stick with what we have. I'm looking at going long Fingerprint, either at a clean lower bullish red line touch or if and when we make a new high from the channel, given that the RSI looks strong too, both on the daily and on the weekly. And finally, the most interesting shorting candidate I have come across in a while, Tesla. My premise in this case is simple. What goes up typically goes down, but what goes parabolic most certainly must go down, if only as a correction before proceeding higher. In 1 year, Tesla has gone up by 440%, and we're talking a multi-billion-dollar company here, not a penny stock. The parabolic run we have seen is nothing short of insanity. Tesla did recline by some 65% during the COVID hysteria. It has since recovered it all and even proceeded to new all-time highs, albeit with a huge RSI divergence on the weekly. What is even more remarkable is that the RSI on the weekly reached a whopping 93.95. You'll have a hard time stumbling upon such extreme RSI values on any random weekly chart. Once Tesla's crazy ride to the north is done, I believe it has a long way down to go. Many respectable investors and traders are looking at proper shorting entries and have been so for some time already, some already back when it was trading at $200 to $300. Here's my game plan. I still think Tesla can go higher, but since new highs prior to crashes are always in uncharted territory, taking a long now is much too risky. What would likely happen in such case, though, is that we'd get a 3-top RSI divergence, the strong and reliable kind. This would coincide with a probable distribution phase. And once we get a clear touch on the upper bearish blue, we're talking about a stupidly attractive shorting opportunity, one in which I will go in heavily and with huge leverage, possibly as high as 15 to 20x. And as discussed in full in the RSI trilogy, such generous risk-to-reward play will have its stop-loss at an RSI closing above the upper bearish blue. Simple as that. To sum it up, the Swedish OMXS30 index is still inherently weak, albeit I do begin to see possible parabolic tendencies before this house of cards comes crashing down once and for all. More on that in a soon-to-come episode though. But for the time being, I expect a correction at least to the 1570 area. Swedbank is still weak and shows no technical signs of soon-to-come recoveries. The rest of my short remains in play and my stop-loss is now at break-even due to having hit my first sell target. Quickbit is incredibly interesting long-term. Short to mid-term, however, it shows too much technical weakness to be interesting. Things can change fast though, and once they do, I'll quickly hop on board. Starvolt is highly interesting too. It still shows a lot of explosive potentials, and I am looking at possibly doubling down on my current position. My initial target is at 0.45 to 0.50, and if things go well, it might go as high as 0.80 to 1 krona. Long term, on the other hand, I expect absolutely nothing at all. For that reason, I will treat any explosive move to the upside as one that will rubber band back down again just as they have every single time so far. But from a swing trade perspective, that doesn't make them any less attractive. For from a fundamental perspective, Starvolt still has a lot to prove before being a buy and hold stock. Fingerprint Cards seems to be loading too for an explosive move. I will keep a close eye on this one, although I don't think they're ready to explode just yet. And finally, Tesla. Tesla has had nothing short of a parabolic run, one in which all technicals and fundamentals were rendered irrelevant. Those runs are typically the end of a markup, although Tesla could still have another bit to go. Once the RSI gradually weakens and retests the upper bearish blue, I will be there laddering in heavy shorts with heavy leverage, 10 to 25x depending on the technical map and entry timing. I hope this episode was helpful to you. That was all for now. Thank you and goodbye.